Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hey everybody, welcome to Mortgage on My Mind. I'm your host, Natalie Salins. Today, we have with us Rachel Clark, who is the Executive Director of Broker Action Coalition, where she oversees day-to-day advocacy operations. With a deep expertise in grassroots organizing and legislative strategy, she leads efforts to advance the coalition's mission of protecting consumers and supporting mortgage professionals nationwide. So I am so excited to talk to you today. I rarely get to be on our podcast and have very little understanding of all that you do in a day. And when it still has something very much to do with my career and all of my clients' rights and everything. So I'm super excited to speak with you today. Thank you for joining and being on.
Thank you for having me. I'm excited to talk to you about the back and what we do.
Awesome. Let's get started. Tell us a little bit about why started this coalition and what it's about and what your daily looks like.
So the back was started, we call it the back, the Broker Action Coalition, but for short, we say the back. It was started because there was this need for mortgage brokers to have a representation in DC. When rules and laws are being made, it's important that you have a voice in them. As a mortgage professional, you want to make sure that your voice is heard, but like your perspective, because everybody sees things differently. And so that was the real importance of why it was created. When the fallout of 2008 happened, many of those rules were made without mortgage brokers in the conversation. And it's a different business model. It's a different perspective that wasn't represented, right? And so that's really what the reason behind the back being created was for, is so that doesn't happen again, that we are part of the conversations and that we are showing mortgage brokers have a different way of doing things, but it's not the wrong way. So
not always. Yes, I started in 2005. I definitely remember when all the incredible regulation came out and what it meant for us and how different it all was.
Yes. So that's what we're trying to work through, is how do we prevent things like that from happening again?
Exactly. So tell us a little bit about this historic victory on the trigger lead bill.
So we are very excited about the trigger lead bill being signed into law. I believe it was September 10th-ish that the president signed it into law. When we formed back, we asked our first supporters, hey, what is it that you want us to do? What is it that matters the most to you? What is it that we need to fight for? And overwhelmingly, the response was to stop trigger leads. We formed the back shortly after COVID. And so when the rates started ticking up, that is when you really started seeing the effects of trigger leads and like the selling of the data and all of the calls and everybody being bombarded. And so that's when brokers were like, this is ridiculous. We want something to change. And so that was just a mere 3 years ago that we started this fight, which seems like a long time, especially when you're a broker and your clients are getting hundreds of calls all the time. But when it comes to passing legislation, it was actually a really quick process. So we're very excited to have it passed and it be implemented in March. So.
Wow. And what does that mean going forward exactly?
So going forward, once it's implemented in March, then the sale of consumer data is stopped. So when someone gets their credit pulled, We experience it on the mortgage side and know day to day what that means. As a consumer, when they go to shop for a mortgage and they get their credit pulled, the three bureaus, TransUnion, Experian, and Equifax, sell that data. Not the person pulling it, not the company that person pulled it from, but the actual credit bureaus are selling that data to multiple people, honestly. And then all of them are calling this client and trying to win that business. And it's one, first, annoying, but two, it's a basic privacy invasion when they're selling this data.
It's so intense. I say this, I literally had the conversation an hour ago. We pulled somebody's credit, it's a refi, and the buyers called and they were like, Natalie, I can't run my day. I'm getting a phone call or a text every 2 minutes. I don't know who to pick up the phone to and who not to. I don't know if it's a work call or just spam.
Right.
And like, they're offering me 5.25. You offered me 5.99. What's about, like, it is chaos. And I told them today, it's the conversation I have with everybody, because a lot of people will call me angry and be like, you sold my information. And I'm like, all right, let's take a second and just think about this. Why in the world would I want other mortgage brokers reaching out to you? So let's just take a second, because if I could pay a fee for them not to, I would. If I could pay monthly to not have your phone blown up every time I pull your credit, I would. The last thing I want is for the bureaus to be selling your information. And then I always say, just so that they understand I'm on their side with it, it should be illegal. It's incredible to me that the bureaus that hold all of our private information, down to like the gym that we joined when we were 16, has the right to sell our information. It doesn't make any sense to me. So I didn't even know you guys were working on this.
Yes, this has been a fight. I say a fight. The only people pushing back were the credit bureaus because they're making money off of it. And that's the other part. They're profiting off selling consumer data. And it's just, that's crazy. You wouldn't find a doctor doing that. Oh, let me go sell your test results.
No, like, how can it be? And such private information. Do you know what I mean? Like, the information is so incredibly private based on our social security numbers and our date of birth. And that's amazing. So it passed.
It passed. It got signed into law. It's got a 180-day implementation period. So that's what we're in right now is that 180 days. That comes to end in March. I think it's March 3rd is the date, but I know it is in March 2026. So what happens at that point is it turns off the ability for the bureaus to sell. So this was a big thing when you talk about buying and selling this data. The buyers is where people get mad, is because these are the ones calling your client, right? Like, you want to stop them. But really, like, police thousands of people buying the data is going to be obviously difficult. So this bill doesn't go after them because there's already rules and laws in place about making sure you're telling them that you're not with their current person, that people don't follow. So those laws are obviously not working. So this one turns off the selling. So they're targeting the three credit bureaus. They can no longer sell that data. So it's not as difficult to implement, if that makes sense. Like, it's an easier process to say, hey, you sold the data, like, we're coming after you, because there's only three at the end of the day, not thousands. So that's what we're excited about. I think you will see a drastic drop in calls, text, mailers, things like that, when people are like trying to shop for a home in already the most stressful time, because many times people do this maybe every 5 years. Like, people aren't buying homes every year typically. Like, most buyers do it every couple of years, and it's a stressful process for them. And so we're excited to at least stop one of those pieces. And it's like you talked about, the trust, because as a mortgage professional, you're building this trust day in and day out. And when it happens and these people get calls, then they're like, how can I trust you? Like, how do I know what you're telling me is the truth? And so I think that's one of the biggest things for mortgage brokers too, is like, you're going to be able to develop that trust and know it's going to stay.
Exactly. Exactly. And it's hard for them because people are so nervous about their data and their information being shared. For every single 100% of the apps that I get in, the question of, are we okay to share data is always marked no.
Mhm.
Even though we have to, because if we're giving it to somebody else to service, we have to share their information. But every single 100% of people are always marking no. It's not something that we would ever want. And it's so hard to be able to do what we call an opt out. As of course, but I'll share with the audience, there is something called opt out, which means you can get yourself on a list where for 5 years you have joined a list that the bureaus are not allowed to sell your info to, or that people aren't allowed to actually target you. But it's a pain to sign up for, and you can't hit every single person that you're pulling their credit to do an opt out on. And it's very, very time consuming. So this is
And the stuff I've heard is it takes 5 days to like go into effect. Like it's not an immediate thing. So if they do it and then you pull their credit, like it doesn't always work. And so it's one of those things that's it's a broken process. And
right.
so this fixes that.
Exactly. Exactly. That's so great that we have somebody fighting for us in this way. What else are you currently working on now that you've won this very big bill, which is
So
incredible?
we have a few other legislative bills that we're looking at and supporting and trying to get people to send letters on. The first one is called the Mortgage Insurance Freedom Act. And this was introduced by Representative Meeks and Representative Sessions. And what it is, it makes FHA loans mirror conventional loans in that the mortgage insurance would fall off at a 78% loan to value instead of staying for the life of the loan. So these borrowers that are purchase FHA, and we're
Yeah.
kind of looking at it from the perspective of think about a lot of clients who purchased or refinanced during COVID, but are in FHA loans. Their rates are so low, they're not going to want to refinance to drop that mortgage insurance. But if it can fall off at 78% LTV, they can keep that low rate and maybe save $200 a month. So that can help them out.
More.
So that's what we're looking at. We think it's a great way to support consumers in general, just really give back to people who are in these FHA loans. If we can save them money without making them refinance, then
Do you
obviously
really
it's
think that's gonna happen though? It's, I know FHA used to, right? It was like 15 years ago. FHA after 5 years would drop the MI.
yeah, something like that. I remember.
Yeah, yeah. So maybe they go back to that rule because
So
they
yeah, I
stopped
mean, it
allowing.
it depends. So the reason it was brought up and the reason the bill was introduced is the FHA mortgage insurance fund has to be at a 2% like reserve. They're at like a 14% reserve, which doesn't sound that bad, but it's billions of dollars when you're talking about this reserve fund. And so it's, hey, the reason we're pushing for this because there's so much money sitting there that doesn't need to be, that
Yeah,
why can't we give some of it back? People are
right.
still going to buy FHA and in a few years sell and buy another house. So it's not all of FHA loans that it would affect because you're still got to get to that 78% LTV. But if it's 500 Americans that can save money each month, is it worth it? Absolutely. You know what I
Sure.
mean?
It's all my clients. It's so hard to see them refinance out of their 3.25, 2.75, but they're paying out here in California, they're paying some like $750, $800 a month in MI.
Oh,
And
yeah.
so when you do the numbers, you're like, all right, so we'll refi you out and we'll put you at 6%. The payment's going to end up being the same. So
Mhm.
you're saving on the MI, but you're popping up on the rate. And the
Mhm.
only thing that you can say is just like you're losing money every month on the MI. You can't write off MI, but the interest rate is tax deductible. You're paying the same, but it's a larger tax deduction. It's so, do we really want to do this? Is it worth it for you? But that's a great, that would be wonderful.
Yeah, we think so. I think it would be a wonderful bill to pass. And like I said, it's not every FHA loan, but if it can help some Americans, especially in the times we're in, like, why not? Right.
Yeah.
Two of the other bills we're supporting are focused on veterans and making them aware of their benefits they earned, specifically the home loan benefit, because there's not that many veterans overall that are aware of their benefits or that use them. So the two bills are called the Valid Act is the first one, and it adds a column on the FHA informed consumer disclosure to show VA loans compared to FHA and conventional, as well as moving the military service question above the signature line on an application, which doesn't
Okay.
seem like a big deal, but once it's above the signature line, it's mandatory as well as reportable data. So then we can see how many veterans are closing in a VA loan versus an FHA versus a conventional, and can see what's the actual data on this, how many veterans are actually using their benefits.
I know. Not to me, a VA loan is the most incredible loan out there. There is nothing offered in this country, even remotely near how incredible the mortgage is on a VA for our veterans. And so many veterans don't take advantage of it. It's
Nope.
amazing to me. So that's wonderful. And then they don't even know that they can, as you
Right.
said. So it
Um,
really is about the information.
Correct. And the other bill that's similar is called the VA Home Loan Awareness Act. And this is just simply adding a disclosure once they're filling out the application. If they check yes to that military service question saying, are you a veteran? Have you served? It would just simply say, you may qualify for a VA loan. Please consult your mortgage professional to see your options.
Sure, to get your DD
So it's a small
214 and
change, but it's one of those things that if they're filling out that application and they do click yes, maybe then it gives them that second thought of, hey, let me ask about this. What is this VA loan? What does that mean? So that at least that conversation is being started. So when they're doing the application, because on the other one, the Valid Act is at disclosure. So they're already under contract, you're sending those disclosures out. So it's kind of like some people say that's a little late in the process, whereas the other one's first step is the application. So I had some there. So those are the two veteran focused bills that we're supporting and really pushing for. Then we have regulatory items we're focusing on. Loan officer compensation is a big one right now with the CFPB. And there have been talks about removing it completely, all of the rules related to LO comp coming out of 2008. And the
interesting. Okay.
problem with that is if you just take everything away, there's unintended consequences that will happen. What those may be, we can't really say for sure, but we just have to look at the rule as a whole and be like, okay, what are the good things? What are the bad things?
Sure.
So what can we keep? What can we reform? What really should go away?
You'll keep HCMLs, right? So you'll keep high cost mortgage loans
Right.
because that is truly to protect the consumer.
The consumer, yes. There are some things when you're looking at like broker versus retail, how the APR calculation is calculated
So dumb.
and why it's disadvantageous to brokers and how it doesn't help consumers.
Not even a little bit. Yeah.
So when we're having these conversations with legislators, we always lead with how this affects consumers, right? Because even
Sure.
at the end of the day, if it benefits us, that's great, but they really want to hear how does it affect consumers? And so the way we show them is taking like a loan estimate from a retail office, taking a loan estimate from a broker, and showing how the rate can be lower, the cost can be lower on a broker, but because of the way things are calculated, the APR is actually higher than at the retail. And so if that's not fair to a consumer when things are out there saying you need to look at the APR, look at the APR, and then you're
Right.
calculating it differently. So
Right.
how do you level that playing field for a consumer to truly shop for a mortgage and understand
Really.
what they're getting?
Yeah.
Um,
There's so much to it. It's such an interesting thing because even the CD, I've explained to buyers when they look at it and they're like, what? And I'm like, so they created this to make closing costs simpler for you. And it's the most confusing form I've ever seen in my life. Like boxes and things that are checked and numbers that don't actually add up on the bottom. And they like it's such an incredible document that we rely on entirely, the loan estimate of the CD. And getting through it with a buyer is really incredibly difficult. And it's very hard to read
when you're just a buyer on your own. I have to get on a call every single time. And I do always say, so they did this to make it easier for you. And it is so much harder to read than just a simple, like, breakdown estimate from escrow. That's normally I'm like, just wait, we're going to get an estimate from escrow, and that's going to be the one that makes sense and that you're going to actually read. It's just a simple 1-page line item. So it is unfortunate that regulation goes too far. APR is one of them as well, that the client is always like, why did you tell me my rate is 6.1 and it's showing here that my annual percentage rate is 6.3? And you're like, it's unfortunate that they called it annual percentage rate. It has nothing to do with your annual percentage rate, actually. And then I
Right.
explained that it has
Well, and then there's
closing,
on
but
the
the
closing
name of it.
disclosure.
Yeah,
In that same section, there's the total interest percentage, I think is what it's called, the tip.
totally.
So that has come up recently about, can we just get rid of this? This does not make sense. It confuses anyone who actually looks at it. Like, what is the benefit of this?
It's so
Can we
true.
just get rid of it, please? So that's another one we're like all for removing that off of closing disclosures, because that's another one of those numbers that I think they thought would help people, but I don't think at the end of the day it helps anybody.
Yeah.
So that's all in that, what we're looking at with LO comp. We are also watching discussions and waiting to see what happens with Fannie and Freddie and should they go private. There is talk of the IPO and selling shares. And our biggest thing is whatever happens, we want to make sure the 30-year fixed mortgage is safe, that you can still have a 30-year fixed mortgage even in tumultuous times. So if you think back to the early days of COVID, a lot of your non-QM jumbo products, different things like that, a lot of them went away because who knew what was going on. And so
There was an investor interest. Yeah.
So we just want to make sure, should something happen with Fannie and Freddie, that we can guarantee we can still close a 30-year fixed mortgage, because at the end of the day, that's really what's sustaining the mortgage industry. And even though rates are high and like housing supply is weird, mortgages are pretty stable. So we
Yeah.
don't want to do anything that would really disrupt it too much and just go back to a COVID time.
Destabilize. Yeah. Yeah.
So that's why we're watching that closely to make sure we're in certain conversations or presenting our opinions on things, that what's important to us as brokers is that stability more than anything, because that really affects the consumer.
Exactly. Exactly. Interesting. And so then how, because you guys have been around only 3 years, is that true?
That is correct.
That is crazy that you have been able to take on and triumph as you have in just a 3-year time. Are you a lawyer, or is somebody in the organization a lawyer in order to take on this type of legislation?
We don't have anyone in our organization that's a lawyer. We've hired a lobbying firm that is in DC that does help us with on the Hill meetings, like a lot of those things. But really, when it comes down to it, it's just picking the right message that people get behind. Like with trigger leads, it's real easy for people to support us banning trigger leads because so many people did not like that.
Awful.
So,
That's
right.
terrible.
So
Yeah.
there's right now brokers, really a lot of them complain about builder steering to like their in-house lenders, and I get that's a big issue and y'all want to fight it, but builders just really have a bigger lobby in DC, so it's just not the fight to take on right now. But I think when you are very strategic about your message and what you're taking on, you're able to do more and work with other groups too, because trigger leads was one thing that you saw the whole industry come together and really rally against. It wasn't just one group or another. It was consumer groups, it was mortgage groups.
Of course.
Everybody was like, hey, we need to stop these. So that's what we're really working towards, is even though we're the young buck in DC, being the one that kind of works well with everybody so that we can get what we want through. So that's
so cool. And how long from when you started on the trigger lead bill, how long did it take to actually pass? What was that process?
So it was introduced, it's been introduced for a couple of congressional sessions. So congressional sessions run every 2 years. And so at the beginning of each session, they have to reintroduce all of the bills that didn't pass that they want to try to pass again. So last session was really our first session that we really were able to push a lot on, even though it had been introduced a couple of times before. So last session ended last year and it had passed the Senate unanimously, which means even though they didn't take a vote on it, they basically asked everybody, do you oppose it? And nobody opposed it. So they're like, okay, it passed the Senate unanimously, which is the smaller chamber. So it's a little easier to get people to agree. The House, on the other hand, had not passed it. And it went to 2 days before session ended at the end of the year, going back and forth, like throwing it at the Speaker of the House and saying, hey, we really want this to pass. And he's okay, but then something else happens. And so it was like down to the wire at the end of last session, which gave us a lot of hope because obviously there's people in Congress that care about this too.
Sure.
And one of our biggest supporters, Representative Timmons, I think he's out of North Carolina, but he actually got his credit pulled last session. And he was like, this is ridiculous. And so it's like, hey, they even affect elected officials. And so he's one of our biggest supporters of saying this needs to go away. And this session started at the beginning of this year, obviously. And we were really hopeful to see it come like right out of the gate. And it was like, January went by, it wasn't introduced, and we're like, oh man. But our lobbyists, they're in communication with these offices all the time. And it's like, yeah, it's getting there. Like, we know it's important, like, it's going to get introduced. And we have our annual event called Advocacy in Action in April in DC each year. And Representative Rose out of Tennessee, who introduced this bill, actually came to our event, spoke, and then signed the bill to introduce it at our event. So
wow.
It was the coolest experience, I would say, as somebody who was not interested in government in high school. It was very neat. And so they introduced it in April and started working on co-sponsors. It passed the House in, I believe, July, and then passed the Senate again. And then they came to an agreement to send it to the president in August. And then he signed it in September. So this session, it moved so quickly, it seemed, even though to us, like every day we think it should move a little more, we're like, oh no, nothing happened. But when you look back on it, I mean, for it to be introduced in April and to already be signed into law is really quick for the process. So
it's incredible. You must be so proud. It's so exciting.
it is so exciting.
And how did you get into it? Like, why did you decide that this is something that you wanted to take on and do?
And I started as they started a program called the State Captain Program. And so try to get people from different states to be the boots on the ground advocates to like really spread the message. And I live in Texas. And I tell people Texans are very proud to be Texans. And when they came up with this, my husband and I have a mortgage brokerage. So like I was like, hey, this is a way for me to give back and really help the community that we live in and really advocate for them. Because at the end of the day, that's what we're doing, is helping our consumers and helping our community be better. And that's where I got started. And then it was like, hey, like you're now the co-chair of the State Captain Program. And then, oh, by the way, can you come on part-time and help us with some stuff? And then it was like, hey, congratulations, you're getting promoted to executive director and you're in charge of everything. And it's been a great experience just to learn about legislation, advocacy, running a nonprofit, like all of these things, but also still really be in the mortgage community. That is what brought me here.
So you have a true understanding of it all, what you're fighting for.
I do. And I will say I'm a little different than most people because usually people start either as a real estate agent or a mortgage, like a loan officer when they come into like the real estate world. I actually started as an appraiser and did appraising for a few years first. And so I have a little bit different perspective than most because I've been in the appraiser shoes and like know what they go through. And so I went from there to real estate and then went from real estate to mortgage. So done it all in the process. And I think that helps me as well to see the whole ecosystem, right?
All of
Because
it. Yeah, yeah.
you can't just know one part and then think it's all about that one part. Like, how do each piece work together? How can we make it better for everybody?
Truly seeing it from all sides as well.
Mhm.
That's amazing. Thank you so much for being on. That's our time. I can't believe that's our time. I'm like ready to ask you other things. We probably should get you on again if you're okay with that. I want to do a little shout out for you that you do monthly advocacy for all calls.
Yeah.
So people can, you have a website, Facebook, Instagram, LinkedIn. They can find you on all of those places and on the social. And we'll put all of your information as well, of course. It's been such a pleasure, Rachel. Thank you so much for being on and speaking with us. And congratulations. It's just absolutely incredible. I am so excited to call my manager and my other LOs that I know, because I don't think they know this, and they are going to be so excited. You need to be putting this out. I don't know if you have, I'm not huge on the social, but I do my best. But obviously you're like blasting this everywhere, right?
Yes, we have been. We flooded Facebook. At
Yes.
least it seemed that way for me because I'm friends with everybody who does this stuff. But that was
Yes.
our goal, is to really flood Facebook, LinkedIn, and all of it when we got the news. And we've been pushing more and more stuff about it. And you can find a lot of information too on our website. We have a page dedicated to like trigger leads implementation, what that means, and all that kind of stuff.
So cool. Amazing. Thank you again for being on. And I do look forward to maybe talking to you again. I'll see if we can set something up. And
Okay, sounds good. Thank you for having me. I really enjoyed it.
of course, my pleasure. Thank you. Thanks all. Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.